Good morning, everybody. I'm very happy to be here with you today because we have a very special guest. Today we are going to have a chat with Peter Blau. Peter is the founder and the owner of Lagerboss, one of the most relevant German self-storage operators. Peter has 20 years of experience in our industry. We will talk with Peter about his personal history, his company, his vision about our industry in Europe and in his country. We will also try to get him to tell us some of the tricks of his success. And now it's with great pleasure that I welcome Peter Blau. Hello Peter, I'm very delighted to be here with you today. First of all, I would like to know something about your personal history in the self-storage industry.
Okay, Cesare, well, thank you for having me. I am now, honestly, half of my life in the self-storage industry. 26 years almost, and double that, and it's about my age. So my start in self-storage came in 97 when I joined two American fellows who had money from an institutional party from Belgium to start self-storage in Europe. And their plan was to do this in France and Germany. And they offered me, they were my clients at the bank where I was working, and they offered me a job as chief financial officer in London. So I moved from Amsterdam to London, and that was the start of the business. And this was with one of the guys was Karl Henauer, and he's probably one of the dinosaurs of the self-storage in Europe. This is how it all started.
Great, and then you started your own company. You had a great success with the Lagerboss. Maybe you can tell us something of your beginning time with the Lagerboss and then what you are doing now and how big the company is.
Yeah, right. Well, in 2000, this was the initial consolidation in the self-storage in Europe, and the two American fellows were bought out, and I went back to Amsterdam to work with a private equity fund. And after a year, the German part of that business, which we had done in those 3 years, which I was working with the Americans, came up for sale. And at a certain moment, it was so interesting to buy that I did so with 3 other guys, and I did this next to my other job. So for 3 years, from 2001 2004, this was like a part-time job for me. And after that I said, well, I need to do this seriously or not, which meant I bought out my partners. I took in another partner, and we started to go out officially in 2004. We then very quickly bought 2 freehold projects from Goldman Sachs, who was in the business rather early, maybe too early for Germany. So we ended up with 5 locations, and this was, let's call it the firm start. 2 years later, my partner's wife said, you either have to do the business or you stay with me. So he chose for his wife, and I was alone. Which meant that I had 5 projects. I had a little capital partner in 2 of the projects, and we moved on. And that was in early 2008. And from then, I started to grow the business organically, and which meant it went to 6, 7, 8, 9 projects, and maybe important in 2014. I thought how to grow from here, because as we all know, self-storage is rather capital intensive. And the financing market in Germany was difficult, is still somewhat difficult, at least for projects which are already existent. Which means that although we have the income, the EBITDA, it's hard to get some financing based on your income. So I then took a couple of my projects to a debt fund in London and refinanced that against a far higher loan to value than I would be able to get in Germany, and which essentially freed up equity, which I then used to reinvest in the company for new projects. And I've done that a couple of times since 2014, 2015. So at the moment we have 30 projects open for business. I think there's 25 freeholds. There's another 10 projects in the pipeline, which makes 40 projects roughly, mainly premium self-storage. There's a couple of niche projects which I would call hybrids or luxury container at the site. And in addition thereto, with another partner where Lagerbox owns 80% of the business, we have 6 projects in the Netherlands today. So this is in a very quick time, 26 years of my self-storage history.
Great, very nice history. You can write a book about it and then to share with all our colleagues throughout Europe. And then, Peter, which was the most challenging time or events in your professional life?
That is indeed a very good question. I think if I look back, challenging was we had some breakups with my partner, and obviously if you have a breakup, you have to value the business, and this is not always easy because sometimes you have a very long personal relationship, but you also have a commercial interest, and this has happened at least 2 times. One with the earlier partner I refer to. Secondly, I had some capital partners who were in some of my projects, but not in all, and I thought it was more important to align the interest of all the shareholders, so I try to get them in the holding company rather than on a project level, but there's always differing interests. So that has been challenging, but I managed to get all the noses in the same direction. And in hindsight, I think all the partners are very happy. And some of those partners say, listen, self-storage is such a good business, you never exit.
Yeah, great. And then we see that you succeeded extremely well. Listen, Peter, we are crossing a very turbulent moment right now in Europe for the different events and then interest rates, inflation. What's your vision about the market now in Europe and in Germany?
Honestly, I think that we have benefited from the low interest rates in the last 5 years. On the other side, I do think that a good self-storage project can easily absorb 3 or 4% base rate. Yeah, it actually means that and what I have experienced in the German market is that I was competing for locations where with residential projects, all kinds of other projects, which could hardly afford to go for that project only because the interest rates were so low. So I'm actually expecting, and I'm seeing that actually already, a little bit more offering and better offering of locations, mainly greenfields, possibly also brownfield operations. So I do think that a little bit of higher interest rates is actually not bad for self-storage at this moment. Obviously, if you want to exit, the multiples may come down, that's for sure. But another nice effect of the inflation, for instance, if you have a location which is mature and you're able to inflate your customer prices, that has a positive effect on your bottom line. And we, for instance, last year didn't have the best commercial year in terms of occupancy increase, but if you saw our bottom line, we were able to inflate our prices by inflation and possibly even above inflation, which is a very interesting element of self-storage, that inflation is actually, as long as you can pass that on to your end customer, a nice side effect of the business.
Yeah, I completely agree with you. And then I'm used to say that self-storage is not resilient, it's more as is anti-fragile business. So we keep the level despite the economics grow or not grow that we have on the market right now. What's your vision about the demand of self-storage in Europe right now?
If I look at the two markets where I'm mainly active, which is mainly Germany, to a more limited extent the Netherlands. In the Netherlands, self-storage is far more known, so the awareness levels are higher. If you go to Germany, where still, if you purely look at the numbers, you see that UK, Scandinavia or Holland may have a use per capita which is close to 10 times higher than in Germany. One asks, why is the demand not there yet in Germany? Is it the awareness? Is it the fact that everyone has a cellar? Is it the dynamics? Is it conservatism? I think it's a combination of everything. I do think that Germany is slow in adaptation. I do think certainly in the urban areas and the metropolitan areas in Germany, and mind you, Germany is a little bit different than other cities in Europe because it's a decentralized country. There's not just one Berlin. No, there is Berlin, Munich, Hamburg, Cologne, etc., etc. So it is slightly different. I do think there is a decent road forward to grow. Obviously, we need to have more awareness. I do, however, think that you can't just look at the numbers. I do think that the culture, the adaptation is different in Germany, so that we are not going to see soon the levels we see in other Western European countries. But still, we're coming from a very low level, so I think the growth potential is there. If you look at Germany, the market is owned in a way. It's not, but it's concentrated with 3 operators now. It's My Place, it's Shurgard and Lagerbox, and we probably have like 30-35% of all the sites in ownership. But if you look at the size of our portfolio, it's much bigger than average. So those 3 operators concentrate maybe and own 60% of all self-storage square meters. Although there are other niches coming up like XL garages. So overall, I see in different niches a growing demand, growing awareness, which I think is good for the business, but everywhere a little bit slower than in other countries, maybe very comparable with Italy, which is a bit slow as well.
Yeah, we are very probably the last European developed country in self-storage. Anyway, we are waiting to grow. Listen, you spoke about concentration. There will be a day that we will see some pan-European company working throughout Europe and not just one company as we have now in Europe. So, we will continue to see different companies operating separately, on the different European countries.
There are obviously a few pan-European outfits. The main example is Shurgard, who is operational in 7 countries. This is the main example. We have My Place, who is operational in 3 countries. You see some things that SafeStore, with the help of Carlyle, is now also coming to the Netherlands, is coming to Germany. So there is some pan-Europeanization of the business. You can always ask, is there a benefit of having focus on multiple markets? Because I mean, some markets have different characteristics. But yes, I think the model from self-storage is that you can multiply the number of locations if you have the right model, and certainly if you see the drive towards digitalization of the business, I think there is indeed a benefit of having multiple stores and possibly then also in multiple countries. Yeah? There's also, for instance, private equity companies who are investing now, like Metric Capital, who has interest in the UK, in France, in Poland, in Germany, and Spain. So, you know, things are in such way spreading.
Cool, nice. Thank you, Peter. Just to finish, there is some suggestion, or can you share with us some tricks of to have a success as you had till now?
Well, that's a good one. If obviously when you look back, sometimes I may have been the right person at the right place at the right moment. I've taken some amount of risk, yeah, in my career. I've been lucky, persistent. I mean, this is not a business where you make a quick dollar. Listen, I'm 25 years plus in the business. Yes, rather successful, but this is not a business where certain operators or certain private equity companies make a decision, go in and out in 5 years. I do think that self-storage needs more time. So I'd like to be a little bit different. Maybe it's also my Dutch nature to be a small trader, to be different than the majority. And this has been helpful in positioning the company and who we are and who my employees are functioning. I do think it's a combination of those things. So I don't think there is one trick, but a good team obviously helps.
Sure, you have a long list of tricks that you don't want to share with us. So thank you very much, Peter. Was so kind from you to stay with us today and to speak about our industry. And then I hope to see you quite soon.
Thank you very much, Cesar. My pleasure.
As we saw from Peter, self-storage is a not short-term business. We have to have a lot of patience and build our company step by step. I'm very glad to have this chat today with Peter, and I hope to see you soon on our channel. Bye.